Welcome to Your Wealth Matters. I'm Janet Kim Singh, Portfolio Manager at Capstone Asset Management, and today I'm joined by my fellow colleague and Portfolio Manager on the Private Wealth team, Maria Dawes. Today we're discussing a topic that I hope is relevant to our viewers, and that is politics and portfolio construction. What is the correlation between politics and investments, and what should we do when it comes to portfolio construction in the face of political changes to our economic landscape? Maria, we've recently come through an election here in Canada, and we don't want to talk about candidates or specific policies necessarily, but at a high level, can you tell me the correlation between politics and investments?
Hi, Janet. So that's a nice, easy question to start with, right? But I'll try my best. I think it would be too broad to comment on all investments and their potential reaction to an election or if there was a change in government. But market anxiety that can spiral potentially into chaos is a very real thing. We literally just witnessed this in the US where the S&P 500 dropped 10% within 2 days, right? So there's volatility there. And they're saying that the US index experienced its worst first 100 days of any presidential term in more than 50 years. So that's not immaterial. That can cause some damage, not only to a portfolio, but just as importantly to an investor's confidence.
Yeah, that's fairly dramatic. Now, Maria, we haven't seen this type of market action in Canada yet, and that's not to say it can't happen. But I would say the scenarios are quite different in that the US experienced a change in government, whereas here at home, we had another Liberal Party win. But it is a minority government, which means getting legislation passed is not as simple. To me, this means we're not going to see drastic changes in policies from day one. It's going to take some time, and this is good from the standpoint of market stability. So I think the bottom line, what we're saying is there is a correlation between politics and moves in the market, especially in the shorter term. Maria, in practice, in conversation with your clients, is this meaningful? What's the sentiment that you've experienced?
Yeah, for me, it's been a bit of a mixed bag. I would say that some are really bothered by the volatility. I mean, this creates a lot of uncertainty. And as people age, we tend to have less of an appetite or less of a runway to tolerate uncertainty. Instability and all things volatility related can create a lot of fear and concern.
Yeah, I agree. I think even for clients who have a comfortable sized nest egg, they have a fairly good financial situation. This uncertainty can be worrisome, and I've certainly witnessed that in my conversations as well. Now, I guess the question then becomes, how does that affect portfolio construction?
Yeah, one thing we haven't really touched on is time horizon, right? We spoke about a massive drop in the market in the US in April and year to date at the time of this recording. The return on the S&P 500 is still negative, but it's come back a bit since its lows. And those with a long time horizon should avoid feeling the pressure to overreact to the headlines. It's wise to maintain a long-term view and adjust based on evidence, not just speculation. And also, I just want to echo what Paul, our colleague, said in a previous video commentary, that I think it's important to not make material changes to an asset mix in response to who wins an election. This is not really a reliable way to protect capital, and it can actually lead to really costly mistakes. And over the long term, we believe there's value in having stock market exposure, obviously, and investors who have properly diversified their portfolios are usually rewarded for staying the course.
Right. So basically, no knee-jerk reactions.
Yeah, exactly. But that said, we all know that an election can introduce new policies and initiatives that will become the priority over the next term, and these can potentially change industries for the better or for the worse. That's something that an investor needs to consider, right? So even if it's for worse, there may still be opportunities available from an investment perspective in that sector. Or perhaps now is a good time to rebalance a position that you're maybe overweight in to hedge against uncertainties going forward.
Ray, I totally agree with you here. No surprise. So we've touched on the markets, but what we haven't really addressed yet is interest rates. And obviously we have equity funds at Capstone, but we also have fixed income holdings and funds. So the interest rate conversation is a big one. Now, while we don't want to speculate what direction inflation is going in and what that in turn will do to interest rates, we are watching carefully. And by that, I mean not only us as portfolio managers on the private wealth team, but our investment management team is always assessing the economic landscape, trying to find that balance between being proactive versus making those knee-jerk reactions that can potentially be destructive to one's progress. Maria, I know we could continue to dissect this so much more, but we should start to wrap things up. So, what is your final take on all of this?
Yeah. So my final take, Janet, is that it's prudent and wise to be forward looking, to anticipate how the political landscape could affect our lives. And that includes our investment portfolios. But we also have to discern when action is necessary. And I'm of the belief that you already have a well constructed and diversified portfolio. You are probably pretty close to being there and being well positioned. But that's not to say you won't ever experience volatility in returns. And hopefully, your underlying holdings are non correlated enough that not everything is being impacted to the same degree at the same time. That's the true power of diversification.
Thanks, Maria. I think that's a great summary and a great way to end another edition of Your Wealth Matters. Thanks for viewing, everybody, and see you next time.
Bye for now.